EOH, which has grown to become South Africa's largest enterprise application solution provider. In fact, it's probably the largest IT solution provider generally and dominates in quite a lot of different markets. The way it's done that, of course, is partly through organic growth, but through lots and lots of acquisitions. The CEO, Asher Bhobot, who's both the founder and the CEO, has really perfected this. It's a roll-up business model. They keep buying people. And so about half of the growth comes from organic growth of the existing business, and the other half comes from buying people in. And they seem to be very good at acquisitions. They bring people on board, keep the energy. They don't have that problem where they seem to buy things which go off the boil. 17.9 billion rand. So strictly speaking, we should have talked about this one first because it's a lot bigger than Datatech. Price to earnings ratio 20.22. That reflects a company that people have got a lot of confidence in with regard to future earnings. Dividend yield, who cares? Only 1.5%. What's the problem?
So a very different model to the Datatech that we saw, and I think that's reflected in the PE. I mean, the market is really willing to pay up for these earnings, given the long-term contracts that they tend to have. Normally, these contracts run for 3 to 5 years. It's escalated with inflation. So I think if you want to be in the space, this is the type of company that you need to look at.
So what they've done is they've got, for example, relationships with big corporates. Only I think 1/4 of their business is with the government in South Africa. The rest is with large corporates, and that could range from banks, telecommunications companies, all big IT-driven type organizations. And then, as you say, they do that whole IT as a service thing, where they kind of put people embedded in, they assist them to do reorganization of what you were referring to, upgrades, system integration. A lot of SAP work. That's the German IT solution provider.
Also IBM. So I think what they've really done successfully is build their own IP, but also use the IP of their partners. So SAP, IBM, and Oracle, and integrate that into some of their clients' network.
I noticed that. So they did point to the fact that they were doing some of their own in-house IT development. So what is that? What sort of things, as far as you know?
So those are some of the companies that they started buying, and some of it is within the financial services. So a lot of work on the background for the banks in terms of the ATMs, some manufacturing facilities. So just getting your operations correct.
Some of these businesses that they've bought recently, like Apptronics, I mean, the kind of deals they do, so they've got a 17.9 billion market cap, so they do deals where they buy companies worth 200 or 300 million. Some founder guy who's made himself a fortune then brings that energy in. And like I said earlier, they seem to be able to preserve the teams and keep them intact to the extent that it helps. They're not too heavy-handed with sucking these guys in.
And I think it talks to the deal structure and the way they approach M&A. So they normally give 50% cash and 50% shares, but they do lock in the management team. And I think that's why they've been so successful. And of course, they use all the synergies from the big head office of EOH to get those costs down and leverage their own networks for these businesses that they've brought into the EOH.
Share chart will show a very, very successful run. Really a tremendous acceleration and growth from a very small standing start. Since then, a little bit choppy. But again, results look fine. Everything looks good with regard to the current model. Very South Africa developed. I was going to say South Africa dependent, not developed. That's my only other. So if you look at them, they're like 87% South Africa earnings with a little bit from rest of Africa and then some tiny, which is quite an interesting move because most other companies have gone for more developed country.
So very South African focused. Also about 20% of the earnings come from the South African government, which I think had a couple of people concerned. But they are starting to make deals internationally. So interestingly, they just moved into Morocco, Turkey, Iran, looking at putting up those big data centers, getting cloud computing. And they're saying the industry structure in Morocco and Turkey are very similar to South Africa. So they hope to roll out that same strategy in those markets.
Okay, it looks to me like we've got to back these guys. I mean, Asher himself is also about an 8% shareholder or thereabouts. The chairperson of the board, Sandile Zungu, is one of my old university mates.
Nice.
He must have done well out of it as well because I know that he's become like an anchor shareholder as well. And this is billions that have been made through the rising share price. Got to go hot on them, would you say?
Definitely hot.
Excellent, good.